What is tax loss harvesting and how to utilize it? That's our topic for discussion today in the Market Secrets Investment Series. Before we head into the session, I have a notification for you. In addition to the investment series, we have multiple other series running in parallel on algo trading, on price action trading, and on trading strategies. Also, we have multiple data feeds being provided as part of our website. So if you are interested in any of it, and if you are an active trader, do check it out. Our website address is www.marketsecrets.in. And with that note, let's head into today's session on tax loss harvesting. So what is tax loss harvesting? It is nothing but just another way to save taxes. In the last episode, we have talked about LTCG tax harvesting, which is a way to reduce tax burden created by profits from equities. Likewise, we can use any losses that we have and use it to reduce taxes as well. In tax loss harvesting, you book the losses and offset the gains in any other instrument to bring down your tax liability. So let's take an example to understand this better. Let's say you have invested 5 lakh rupees in an equity mutual fund on January 1, 2021. And let's assume that on October 2021, your investment value is reduced to 4.75 lakh rupees. So if you sell your investment now in this scenario, your short-term capital loss would be 25,000 rupees. So if you sell this investment, you are booking the losses, but do remember to reinvest this money immediately to avoid deviating from your investment plan just for tax saving purposes. So don't ever forget this. So if you are just selling this investment, you are booking the losses and you can use this to offset any short-term capital gains you might have received in the same financial year. This is one of the smart way to save taxes. But if you cannot use your capital loss to reduce your capital gains in 1 year, then you can carry forward your losses for up to next 8 assessment years. Now, let's assume that in the same year or 2 to 3 years down the line, you sell a short-term equity mutual fund investment and make 50,000 rupees in capital gains. Since you have a gain of 50,000 rupees, you have to pay taxes. However, you can remove 25,000 rupees from this 50,000 rupees gain for tax calculations, as we already have 25,000 rupees in short-term capital loss earlier. So your effective short-term capital gains will be 50,000 rupees minus 25,000 rupees, which will be 25,000 rupees, and you will pay tax only on this 25,000 rupees against the original 50,000 rupees you would have paid otherwise if you haven't booked the short-term capital loss of 25,000 rupees earlier. And since STCG is taxed at 15%, you will be paying 3,750 rupees as tax due to tax loss harvesting instead of 7,500 rupees tax which you should have paid originally. So this saves 50% of your tax expenses. This is how tax loss harvesting acts as a critical strategy to save tax for many investors. The same thing can be repeated for LTCG as well. But there are a few things that we need to keep in mind while setting up the losses using tax loss harvesting technique. Number one, long-term capital losses can be offset against only long-term capital gains. You cannot set off long-term capital losses against short-term capital gains. Number two, short-term capital losses can be offset against either short-term capital gains or long-term capital gains. The tax gain and tax loss harvesting are simple yet vital tools to bring down the taxes you will pay on your equity investments. But remember, you have to reinvest the money as soon as you get the redemption amount in your account to avoid the risk of breaking your compounding journey. So don't ever forget it. With tax loss and tax gain harvesting, we are taking advantage of the tax rules and trying to reduce the taxes. But in doing so, you should never deviate from your investment path. So if you are redeeming something to harvest the tax, you need to reinvest the money back immediately or as soon as possible. That's very, very important. Don't ever miss that. With that, we have come to end of today's episode on tax loss harvesting. So have you ever harvested your tax loss to reduce your taxes from your trading profits? I hope most of you would have. I really hope this session was useful. If you have any queries, comments or feedback about this episode, let us know in the comment section. We'll be happy to answer and address it. Also hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.